Yeah.
Good evening, everyone. I welcome all with great pleasure to this important webinar. कंसोल ब्रांच आप सभी का हार्दिक स्वागत करती है और इथिकल स्टैंडर्ड बोर्ड के साथ हम ये आज एंगेजमेंट विद प्रीवियस ऑडिटर करने जा रहे हैं। हमारे साथ हमारे आज के स्पीकर माहेश्वरी जी हैं जो कि जयपुर से हैं, अंकित जी माहेश्वरी। और ये सब्जेक्ट बहुत ही इम्पोर्टेंट है। आज कम्युनिकेशन में बहुत ही इश्यू आ रहे हैं प्रीवियस ऑडिटर के साथ। कभी कभी हम देखते हैं कि किसी की फीस आउटस्टैंडिंग रह जाती है, फीस अगर वो दे भी देता है तो चेक बाउंस हो जाता है बाद में। तो इस तरह की बहुत सारे क्वेश्चन अराइज होते हैं और मंदसौर ब्रांच अपने इस कार्यक्रम में आप सभी का वापिस से एक बार पुनः हार्दिक स्वागत अभिनंदन करती है। मैं एक बात और कहना चाहूंगा कि सीए कनेक्ट पोर्टल से भी आप सभी जुड़े। आपके पास बहुत सारी अपॉर्चुनिटी आ सकती है। आप सभी सीए कनेक्ट में अपना अगर नहीं जुड़े हैं तो जुड़े, क्योंकि इथिकल स्टैंडर्ड बोर्ड बहुत ही अच्छा काम कर रहा है। मैं बोर्ड की तरफ से, मंदसौर ब्रांच की तरफ से आप सभी का हार्दिक स्वागत अभिनंदन करता हूँ। थैंक यू सर।
Thank you, sir. Thank you for your address. And may I now request CA Nayan Jain ji, Treasurer of Mandsaur branch, to kindly speak for the profile of CA Ankit Maheshwari ji.
Thanks, sir. Is my voice is audible, sir?
Yes, very audible, sir.
Thank you very much, sir. Thank you, CA Ankit Maheshwari, sir, for giving us an opportunity to hear you. Now I am introducing CA Ankit, sir. CA Ankit Maheshwari, sir, is a highly accomplished and dynamic chartered accountant with an exceptional track record of over 20 years of experience, spanning various geographies. With a strong focus on enhancing the financial reporting framework of large listed company in India, Ankit sir has established himself as an expert in assurance services. Now, Ankit sir expertise and reputation extend far beyond his consulting work. He has been actively involved in various government initiatives in Rajasthan, where he is the trusted advisor for channelizing investment in the state. Ankit's contribution to the field of finance and accounting have also been recognized through his research publications and articles on tax literacy, accounting, and finance. His research has been published in the leading journals and has helped shape the discourse on this topic in India. As a former secretary of ICI Jaipur, Ankit sir has been an active member of the organization for several years. He has been instrumental in driving initiatives that promote ethical standard, professional excellence within the finance and accounting industry. Ankit sir, his commitment to excellent deep knowledge and expertise in finance and accounting make him a sought after advisor. His ability to provide strategic guidance and his dedication to mentoring young professionals has earned him a reputation as a trusted advisor to his client. Additionally, Ankit served as the head technical reviewer at the research committee of ICI, where he plays a crucial role in maintaining and advancing technical standard within the profession. He has compiled a compendium on commonly found error in financial reporting framework, showcasing his commitment to upholding the integrity of financial reporting practices. Ankit sir has also published the research papers on corporate reporting practices in India, contributing various insightful to the academic and professional discourse within the field. Now I am welcoming Ankit sir to deliver and enlighten us on this topic. Please welcome Ankit sir.
Thank you. Thank you so much, Nayan, for such a warm introduction. And my sincere thanks to CA Dinesh Jain Saab and the entire Mandsaur branch. And it has been long awaited session. I always thought of coming physically there, doing some deliberations. Somehow we couldn't manage that. But I think through technology, we have this option to, connect and do deliberation about a very important topic which Ashish ji highlighted. And it is Ashish ji's brainchild which basically got into this, being secretary to Ethical Standard Board. And almost on a daily basis he receives lot of complaints with lot of resolution. I've seen him working very hard about redrafting the revised code of ethics also, and also most importantly the complaints which comes to pertains to unjustified removal of auditors. So this time we thought that we will come out with something which requires much more needed attention in terms of how maybe in CA finals everybody would have studied it. It has been 25 years even while I was studying. That's the last time in an academic session you study that how do you communicate with a predecessor auditor. But in this case, because of the number of complaints our disciplinary directorate receives, because of the lapses inevitably, which we fellow chartered accountants sometimes enter into, we have to actually look into the technical aspect of it and try dissecting it. That what should be the modus operandi, what should be a most ideal way to communicate with the predecessor auditor, and what all challenges you might face. So we don't want only to read item 8 and item 9 in front of you. I think every member here is an experienced member, is aware. But certain questions which we always wanted to sort, that what do you do with an disputed fee? What do you do with an undisputed fee? What do you do for non-assurance engagements? What do you do for other assurance engagements? How to check the compliance of the Companies Act? All these issues were set up by Ashish ji, and Ashish ji, I'm highly grateful that while the elections are on peak, you are still able to manage to do this much important thing at a time where companies are generally transitioning their auditors because of conclusions of AGMs in September, and that's how the new appointment takes place, and we feel that there's a lot of queries coming around it. So we will deliberate it very systematically with all the precedents what Ashish ji has given to us, what I acquired going to the disciplinary directorate, and with ethical standard board. That's how we intend to deliberate it. Thank you everyone for joining. My again, special thanks to Mandsaur branch and ethical standard board to make sure that this happens. I'll share my screen and then we take it forward from there.
Yes.
Hope the screen is visible.
Yes, sir. Yes.
Right. So as I told you, right, and from where this backdrop come, the background is that still I feel that, not I feel, in fact, that's a fact, that more than 50% of the cases at the disciplinary directorate also pertains to this above matter, which is item 8 and item 9 of the, of the part 1, right? So we have to discuss about how to communicate with the previous auditors, what are the grounds on which non-acceptance of audit should be done, also ensuring compliance before acceptance the audit, the compliance of section 139 and 140 of the Companies Act. And we will try to do some scenario analysis. When does a casual vacancy comes? Uh, what is considered to be a casual vacancy? What do you do in AG audits? Because sometimes you don't know the name of the previous auditors. What should constitute a valid proof of delivery? All these things we'll try that we deliberate it over. I'll answer, Arpit. I'll answer all questions. I'm happy that we have interactions. Arpit has raised a question that previous auditor has not sent NOC for tax audit. How we shall know who is the previous auditor and how we can communicate? Arpit, I'll surely, all these questions, please keep on putting up your questions. I assure that none of the question will remain to be unanswered from this forum. Whatever, to the best of the knowledge I know, I'll try to disseminate it. So we'll come on it, Arpit. Just allow me some time. I'm just breaking the ice, but surely we will come on it, and we are happy to take all the questions. So let's look into what does clause 8 of part 1 of first schedule says. And barely reading the act, it says, and we have to read it again, that clause 8 states that a chartered accountant, and I am not deliberating over the background of these schedules. We have done this enough. I am straight away coming on what does the Chartered Accountants Act, item 8, expects you to comply with. So it says that a chartered accountant will be deemed to be guilty of a professional misconduct if he accepts a position as an auditor previously held by another chartered accountant or a certified auditor, right, without first communicating with him in writing. So if I have to break this clause, right, if I have to dissect this, number one, that if he accepts a position, right, without first is what we have to understand, because many of the cases at the level of disciplinary directorate are adjudicated guilty because the incoming auditor basically communicated through a valid proof of delivery, but that was done after the acceptance of the appointment, which is the matter of question. So here, for us to undertake an outcome around it, the first thing which we need to understand is that it has to be done prior before an audit is being accepted. And that's how, so we will do an entire case study where we will try to understand that in AGM, you have to give a valid consent to get yourself appointed, and then the company issues an appointment letter. Sometimes you are not aware about the predecessor auditors. We'll cover all these case scenarios. But for us to understand this, I think the number one thing is that you have to first communicate and then accept the position as an auditor. Let's move ahead. So this is where the what Bayer Act teaches us, right? Or what Bayer Act is saying to us. Now, what is the underlying objective of the clause? And this comes from our Code of Ethics, Volume 2, that what is potentially the underlying objective? It specifies that the underlying objective is one, to know the reasons for the change to safeguard the interest of public. It was always expected that auditor, and that's our core fundamental principle also, that auditor is, extremely independent in all the circumstances, and the client should not have any influence over it. So in this particular case, it is expected that if there is a change, the interest of public is secured because of this transition from one auditor to another. Second, the objective is also to enable to understand the reason for change, right? Safeguarding the auditor's professional interest, right? The third idea of incorporating this item 8 is to find out whether there are professional or other reasons why auditor should not accept the appointment. And also this communication with the predecessor auditor ensures transparency, professionalism. Very important thing which comes here is without obstructing the client's decision to change the auditors. So institute, if I have to dissect this comes from I told you, the volume 2 of Code of Conduct. If something has to be dissected, then obviously, we want to know the reason for such changes. The reason should be known to safeguard the interest of the public. The reason should also be known to the incoming auditor to safeguard his professional interest, plus the outgoing auditor should also be able to safeguard his professional interest. Also, to find out the reasons that if there is something, right, which we will discuss, what are those 2 3 important factors that an incoming auditor is not undertaking an appointment. And eventually the law, our ICI code says that the idea is not to obscure uh, the client's decision or obscure any incoming auditor to come. And that is when we plead the cases at the Board of Discipline, right? The Board of Discipline also, in a very careful way, checks this fact that whether there was an obscuring, that whether the incoming auditor was obscuring, the outgoing auditor was obscuring the incoming auditor to take an appointment. So all these 3 4 things in consolidation should be seen. But still it is the free will of the client to take an appointment. It is on client's will to give an appointment and change an auditor. That is something which can happen. But this should not happen into some adverse circumstances where, for example, a qualified opinion is issued. For example, an outstanding piece is pending with the client and he still moves that change. All these are examples where this should be read very carefully. We move ahead from it, right? So I think now we are clear of one thing, that is what is the objective, right? And ICI also has taken a stand that the objective is not to obstruct any auditor to, you know, uh, obstruct any auditor to be changed. Now we come on certain things, as I told you while we were deliberating over the clause, right? That how to communicate, right? So number one, what are the ways to communicate and how to communicate? In lot of cases at the level of disciplinary directorate, right? We realize that certain people, certain chartered accountants, when they are adjudicated, right? They try to give pleas of three, four things, right? One, they say that we were communicating it through client, in which they are saying that, uh, as an incoming auditor, I did not know the details of the outgoing auditor. So I made sure that my communication is through client. Point number one, the communication has to be direct and there has to be no client intervention while an incoming auditor is communicating it to the outgoing auditor. Hope that's very clear, right? Second, sometimes it is said that I went physically, right, handed over the NOC, right, took the NOC, but the board of discipline or the disciplinary directorate does not considers it to be a valid NOC, and then it is again questioned that why the positive evidence of delivery and the methodology of delivering this communication was not properly followed, right? So in this case, even though the law permits you to give delivery by hand, but it has to be done with acknowledgement. But it is still questionable in the eyes of the disciplinary directorate. Uh, the third is the email. So these are two primary problems which we face. That as an incoming auditor, this was communicated through client, or as an incoming auditor we don't have this positive evidence, or we tried reaching out, or the post was not delivered. 4 5 different kind of things come up. So idea is that let us interpret the law, let us understand what is positive evidence of delivery. In this, the law states that the member must ensure positive evidence of communication with the retiring auditor, which can be provided through a registered acknowledgement due, which is registered AD. In this case, it is expected that whatever you are posting is through the registered AD post you are doing. Even we have found cases in which courier receipts or couriers were not considered to be a valid way to provide positive evidence of delivery. So number one, I think we should first ascertain that, whether you sense any possibility of any kind of, consensus which are not built between the incoming auditor and the outgoing auditor. If you are sensing it, I think then the safest way is to do it through a registered AD. Second, the other way is to do a email acknowledgement from retiring auditor's registered mail, which means that you have to check the registered email ID of the retiring auditor. They should be validated, unless you can't have instances where you say that I've put it on a email ID. the ID has to be registered in the records of the institute. That's the ID on which you are expected to mail it to the retiring auditor. And only mail will not do. An email acknowledgement from retiring auditor, right, is also important in this case. That means, that is why in case of bank audits, you realize that certain firms or certain members push for giving an email for a valid no objection certificate from the incoming auditor. The third is the hand delivery with written acknowledgement, right? And where, if you have a hand delivery and an acknowledgement over it, but as I told you that legally sometimes it becomes very difficult to challenge, to track the validity of that kind of an acknowledgement. Also, one more point which I am bringing on table is that this acknowledgement has to be uh, given through only the partner who is the signing partner. So signing partner needs to be the NOC should be taken from the signing partner instead of taking it from a firm, because in past we have found certain cases that the NOC is taken from another partner or some different partner, whereas that partner eventually retires from the firm. All these things doesn't work for practical purposes. What works is that the NOC needs to be taken from the member who was giving assurance previously, before incoming auditor came into picture. And as of now, yes, we have amended the law, which is the UDIN generated from UDIN portal. In fact, Ashish and somebody talked about the CA Connect portal also. In that case, I think there will be some modus operandis which we can find out while communicating it with the previous auditor through this portal itself, so that members are not expected to find out which are the registered email IDs. But all in all, to conclude what is positive evidence of delivery, I think this is important that, just a minute. I think it is important that it is to be done through registered AD or email having an acknowledgement, right, from retiring auditor, or a hand delivery with a written acknowledgement from the partner who was previously giving assurance, or through the latest means which we were discussing, be it through UDIN portal or be it through CA Connect portal. Also, the law gives a disclaimer which says that only posting of a letter, right, under a certificate of posting is not sufficient to establish communication with the retiring auditor unless there is evidence to show that the letter reached the person communicated with. That is why we have to make sure that once we start communicating with the previous auditor, it has to be done through these modes. Now, I would like to take any questions if you have pertaining to the mode of delivery. I hope the three modes are very clear. And if there is any confusion pertaining to these three modes, then you have to, put up your questions here. So I've tried to align few case laws, right? And I think this will give us uh, some better perspective, right? So case law from our case law referencer says a member accepted the position of a statutory auditor and sent the communication to the previous auditor through registered post without acknowledgement due. The council still held it, so it went through the registered post, but without AD. That is when the council held the member guilty. So I told you, that is why I told you that sharing it from couriers or sharing it without any acknowledgement dues, the methodology is very clear and somebody has to strictly comply to this methodology. Let's look into some other case laws, right? So there's a case which says that a chartered accountant sent under a postal certificate letter to the previous auditor, right, before appointment and also before commencement of audit, but there was no proof that they were received by the previous auditor. So, in this particular case, even it was sent before the appointment, even it was sent before the commencement of audit, but there was, since there was no proper no proof of delivery, thus the member was held uh, guilty for professional misconduct, and this communication was not proper within the meaning of words of communication. Again, I told you the thrust of BOD is to look into the manner through which you are communicating with the incoming auditor, right? So that has to be very specific. That has to be taken care, that the manner which we discussed is uh, is coming out, right? Now we move on the next case law, right? Which says what are the duties of retiring auditor, right? So the problem is that once this transition happens, right, certain members are there which take it very sensitively. As a retiring auditor, forget whatever ethics says. I think I am of a believer that once a client decides to change or intends to change a auditor, unless it is a matter of an undisputed fee or a matter of a qualified opinion, I think as community we need to extend more support for such kind of changes. So uh, that's a bottom line, right? And that's where we, while we look into a lot of cases of board of discipline or disciplinary directorate, we realize that sometimes when, since institute is a quasi judicial body and has a power of civil courts, right? So sometimes even the clients are summoned by the institute, right? And you can read it through their board meetings, through their minutes of the meetings, or through minutes of the annual general meeting, that client is requesting. I can show you number of references into it, that client is requesting the auditor to perform the duties on time, cooperate with the client, sign the books, hand over the books. All these things are documented by the client, and still with sometimes there are very few cases, some cases in which auditors themselves enter into that kind of a transaction where there is lack of cooperation, and that is evident in the orders of board of discipline also. In such a case, when client is forced to change, and this force, because we know now as per the Companies Act, the tenure is for 5 years, and if between 5 years any change happens, then it is not it is turned out to be casual vacancy, right? So in that case, the permission of AG and everything is sought. So first, I think while this change happens, it should be made sure that as an outgoing auditor, you are giving full support to your client. You should only stop this change if you think that there has been a difference of opinion, or there is an issue pertaining to audit opinion, or an outstanding fees is due, which outstanding fees which has been acknowledged also by the client. Because when we go into the details of it, this is something which we will deliberate it more. If this happens, right, that's where you are, if you are giving that kind of a cooperation, uh, I think the transition becomes easy, right? So, one, the retiring auditor must provide diligently all the relevant information to the incoming auditor about any facts or issues that may affect the decision to accept the engagement, right? So, as a retiring auditor, you are expected to provide all the information. If the retiring auditor fails to respond without valid reason, the incoming auditor may be proceeded with the appointment after waiting for a reasonable amount of time for a reply. So now we have to dissect this law. My understanding or our understanding, because of this code, it says that if you have communicated through registered AD, now this is very important. This is the outcome of first 15-20 minutes of our study, right? If you are giving it through a registered AD, if you are communicating it through a registered AD, right, you can wait for a reasonable time. There is no reasonable time limit definition which is being defined. But maybe, based on the quantum of the engagement, nature of the engagement, right, size of the client, you have to give that kind of a, factors before you say that I have been waiting for a reasonable time. Specifically in case of stat audits, we don't have those deadlines and everything happening. Maybe in case of tax audits of, individuals or partnership firms or all, trust, that's where that's where I think this can be, these are shorter duration engagements for small companies. But to conclude this at a very, uh, important level, if you have communicated through registered AD, kindly make sure that you can proceed with the engagement after, waiting for a reasonable time. Had it been a situation where email acknowledgements are expected, I think you should pursue, put reminders, pursue, and make sure that if you have not done it through registered AD, make sure that you have a valid proof of acknowledgement or acknowledgement coming from the incoming auditor. Otherwise, this can be slightly disputed. And third is the hand delivery, right? Which I think in modern context, I don't think that is the most appropriate way to go for it. Maybe the ethics still permit it, but I will go with one and third and expect that our fellow members also, hear me out and make sure that maximum communication is done through the registered ADs, right? And giving a reasonable amount of time. So I think with respect to duties of auditor, right, all the facts also needs to be communicated. That may affect the decision to accept the engagement, right? So now we come on what could be probable grounds for non-acceptance of audit, right? So we move from a situation where it was communicated, you were offered to take an appointment in a particular company or in a firm as a tax auditor, uh, and you started communicating with the predecessor auditor after knowing the details, right? And while you made the communication, so while you made the communication through a valid mode, now the point is, what are the grounds for not accepting an audit? What does our code of conduct, what does our Chartered Accountants Act prescribes us that these shall be considered as significant reasons which may influence your decision for not accepting a particular audit. So it says, one, if there is a non-compliance of Section 139 and Section 140 of the Companies Act, that is reason and logic number one, which gives reference to our item 9, which is also part of this entire conversation. That if you see that the appointment or the removal, that is what section 139, 140, and 141 teaches us, that the appointment and removal is not done as per the provisions of the Companies Act. This is clear for this, that means we have to dissect the provisions of the Companies Act, right? Second, if there is a non-payment of any undisputed fee, right, and that undisputed fee has to be correlated, right, to lot of things, the fees which you propose to the client, right? And that is why we say that it is important to retain your working papers in lot of cases. And specifically in small engagements, we found that the engagement letters were missing. We found that the remuneration was missing. We found that, uh, you know, the outgoing auditor was not able to demonstrate, or the incoming auditor is not able to demonstrate his relationship with the client. In all these cases, so one, I think as community, we have to make sure that the fees is pre-decided, not subjected. This happens generally in case of small clients. This happens generally in case where members are practicing in tier 2 or tier 3 cities. So one, have a pre-decided fee, document this entire engagement letter along with the appointment letters. Once you do that, right, make sure whatever the fees is, whatever you have billed is acknowledged by the client, and make sure that the balances in his ledger and your ledger are reflecting same. In case there is a in case there is a disputed fee, also this undisputed fee will include your out of pocket expenses which are pre-decided as per engagement letter. So this also needs to be taken care. So one, through ELs, whatever we have decided, right, uh, is an undisputed fee. Two, whatever client has accounted and accepted remains to be an undisputed fee. If there is a disputed fee, this cannot obstruct the client to change for making this change of auditors, right? And the third reason is the issuance of a qualified report, right? Because of a qualified report, if you are removed, uh, this is the topmost ground that you can reach out to ethical standard board for an unjustified removal. This is a topmost ground that you can, go for a complaint to a directorate, right? In such a case, if you are removed and somebody removed because of a qualified opinion, and somebody or some fellow chartered accountant is accepting the audit, right? Irrespective of, because of your opinion on the audit report, this is a most logical ground for non-acceptance of an audit by the incoming auditor. I am again repeating it, right, to make it easy. So now, since we have, we know how to communicate it. You initiated that communication as an incoming auditor. You initiated that communication with the outgoing auditor. And when you initiated that communication, you found the reasons for which, right, an incoming auditor or as an incoming auditor, you should not accept an audit are also specified, right? So there is no vagueness in this reason. One, if you think your appointment or his removal, right, was not in compliance to the Companies Act, which we will separately cover with item 9, or if there is a non-payment of undisputed fee, as I told you that these undisputed fee shall also constitute any out-of-pocket expenses which needs to be paid. And third is, while as an outgoing auditor, he issued a qualified report, and because of that grievance, uh, the client has changed the auditor. And now, if we have to correlate the third point, that we have to, as community, we have to make sure that we safeguard the interest of the public. So, third point pertains to this. First point pertains to safeguarding your interest as an incoming auditor and outgoing auditor's interest, because sometimes we see when, and what is section 139 140 we need to understand, right? So your appointment has to be done as per section 139, whether you are a first auditor, whether you are being appointed as an auditor in place of a casual vacancy, right, or whether you have been appointed after a tenure of 5 years. All these things are what we are expected to comply to section 139. Sometimes we see these appointments are not valid. Sometimes the appointments are done by board, irrespective they were expected to be done at a AGM, right? Uh, Sometimes the appointments are done between, if there's a 5 year tenure which is going after a tenure of 2 years or 3 years. In all the cases, right, you realize this fact very well, that you have to, take care of all these two, three cases, right? In case you have any questions, please keep on posting, right? I have received as of now only one question which was posed by Arpit, which says that previous auditor has not sent any NOC for tax audit, right? How we shall know who is the previous auditor and how we can communicate? I think with respect to communication, Arpit, I have made very clear how you should know. So you already have, you can check with the client the details of the incoming auditor. Client is somebody from whom you can source these details. Second, uh, if not client, that's what they're trying. Institute is also integrating it through CA Connect or UDIN portal. But in a case where you are not aware about any previous auditor, I think you can't go ahead with the valid engagement, right? You can't take an engagement in case you were not aware of the details of the predecessor auditor. The predecessor auditor details primarily needs to be communicated by the client or through the details in which he has filled in his previous tax audit reports. I hope I am able to answer this particular question, right? Now we move ahead. We move ahead and we have now discussed what is a valid proof of delivery. We have discussed what are the reasons for not acceptance of a particular uh, engagement, and we should now move ahead with what is fees pending, है ना, right, due to non-availability of previous auditors, right? So in this case, institute also clarified one thing, that if previous auditor has not accepted payment of undisputed fee and it's not feasible to transfer the amount electronically, the incoming auditor may advise the client to purchase a demand draft of the undisputed fee, right? So in certain cases, if an audit is done, right, and previous auditor has not accepted the payment, right, for some reason, or in case it is not feasible for him to transfer this amount electronically also, there could be a possibility that it is a small engagement, a tax audit kind of an engagement. In this case, as an incoming auditor, you are expected to advise client. And also, while all these cases come at the level of board of discipline or disciplinary directorate, I am again requesting you to that, document all the processes which are being laid down by the code of conduct. So you can't go in a disciplinary bench or in a board of discipline and just say that, I advise my client to issue a demand draft. The advice has to come in, electronic form, written form, duly acknowledged by the client that he is ready to purchase a demand draft for undisputed fee. The incoming auditor can accept the audit assignment, verifying the payment, ensuring that the undisputed fee of the retiring auditor are paid as soon as possible, right? So it is the duty of an incoming auditor. The idea of formulating this entire law is, it is the duty of an incoming auditor to ensure the safeguard of an outgoing auditor, to ensure that the fees is eventually remitted to the outgoing auditor and is delivered to his account as soon as possible. So you just can't, let it go. We have seen cases where, you say that, okay, we advised the client, we advised, hello, we advised the client, or, one time kind of a opinion was given. Your efforts to sincerely make this fees realize and for an outgoing auditor is always seen at the level of ethical standard board and is always seen at the level of board of discipline. If you have any question pertaining to pending fees, please put up these questions, because these are top reasons. We are discussing on the top reasons that why, as an incoming auditor, you should not accept the valid engage. You should not. You should accept, right? You should not accept a valid assurance engagement, right? So some cases, right, which came to our knowledge and we felt that we should discuss it, right? So one where a chartered accountant accepted the tax audit of the company, I wanted to make it very clear that for any assurance engagement, be it tax audit, be it internal audit, be it stat audit, be it audit as per Companies Act, be it audit of a firm, be it audit of an individual, be it audit of a trust, in all cases, you are expected to seek a NOC from from an outgoing auditor. The problem is sometimes even very mature chartered accountants come to us and say that we were not aware that for internal auditors NOC is required. Also, for an individual tax audit, a NOC is required. Sometimes some few members confuse it with the provisions of the Companies Act and correlated this provision only for the Companies Act. The idea of the session was to, tell all the members here also that in all cases of an assurance engagement, if something falls in the category of an assurance, included if you look the learning objective of the session, including the BRSR assurance, because now India has, their own standards, which is SSAE Sustainability Standard, Assurance Engagement 3000 and SSAE 3410, also on the verge of adopting Exposure Draft 5000. In a BRSR assurance engagement also, you are expected to communicate it uh, to the incoming auditor. Hope this is very clear, right? So, in this case, we are talking of a tax audit of a company, right? Also, the case had multiple things, right? In sundry creditors, right, in the balance sheet of that financial year, there were 3,000 rupees which were outstanding and payable as audit fees. This was evident that if some company is recording any amount as audit fee which is to be payable, it is expected that uh, this fees is a non-disputed fee, is an undisputed fee, and should be paid. And thus, in this case, the chartered accountant, the respondent in this particular case, was held guilty, and also for not ensuring that the payment of outstanding fees was done. We move ahead, right? Now, this is for a disputed fee. So we realized, two, three things. The audit fee payable in the accounts, I told you, is very important. Also, the engagement letters should support. This is also important because once any complaint in this regard or any conflict arise, your engagement letters and your appointment letters and the remuneration which is to be fixed by the board, everything is duly complied with is what needs to be seen, right? Now, what happens in case the incoming auditor objects that for not for the incoming audit sorry the outgoing auditor objects that the incoming auditor should not accept the audit engagement, and the reason which he quotes is qualified because of his qualification issued in the audit report. Then what happens in such cases? In case of a qualified opinion, right, only an incoming auditor may only accept an audit if they believe that the retiring auditor's attitude was improper, right? However, if the retiring auditor issued the qualification for valid reasons, the incoming auditor should refuse to accept the audit, right? Also, incoming auditor must ascertain that as public knowledge of replacing an inconvenient auditor could bring disrepute to the profession as a whole. So, two very important things. Once an outgoing auditor communicates that I have been changed because of giving a qualified audit report, as an incoming auditor, first you have to look into the reasons of giving that qualification. If you find that the reasons given by the outgoing auditor are valid reasons, in this case, you should not, as an incoming auditor, you should not go ahead with the engagement. This is point number one. Number two, in a circumstance, right? If you think the reasons are not valid and the client and it has been slightly unjust on the part of an outgoing auditor, you can obviously take up with the engagement. But my caution to you is, since now your opinion differs from the opinion of the outgoing auditor, you have to document uh, the entire opinion which you have formulated before you take up such assignment where a qualified audit report has been issued by an outgoing auditor. Third, while you accept the audit, right, you should also realize this fact, right, because it was inconvenient for a client, as an outgoing auditor issued a qualified opinion, this was making client inconvenient. The change should not happen because of inconvenience. The change should only happen because of valid reasons, protecting and safeguard the interest of outgoing auditor, and also protecting the interest of the profession. The change should not bring any disrepute, right? Because if today uh, it's today with such a stringent laws, it is difficult to change the auditors, and this stringency is what makes us unique. Constitutionally, the most powerful function we chartered accountants perform is the attestation function. Thus, it has to be made sure that client can't take it. We don't want clients to obstruct any appointment, but parallelly, we also want that there should not be any disrepute to the profession, and the interest of my outgoing auditor is completely secured with the interest of the public. I hope I am able to clarify the same. Next, right? What should be the course of action, right? Uh, in case of change in auditorship, right? In this case, if the retiring auditor has not been informed and the client is unwilling to make the first move, right? The reason for proposed change should be asked. If there is no valid reason, it is better not to accept audit. So law does not mandates you clearly, but it says that if the retiring auditor has not been informed, right? The client has not informed the retiring auditor that he is making this change. Also, client is unwilling to make the first move. Client is not ready to inform. It is the responsibility of the incoming auditor to know what is the reason of this change, right? If he does not found the reason to be a valid reason, it is advised that he does not accept the audit. So, what is your course of action as an incoming auditor? First, to check whether the retiring auditor has been informed or not informed. If informed, right? If not informed, then you have to propose the client to first inform him. If client is still not informing him, then it is important that you know the valid reasons for the proposed change, right? If you don't find, as an incoming auditor, you don't find these reasons to be valid, it is important that they are they, that it is advisable that such an engagement is not accepted. Second, if the incoming auditor decides to accept the audit, right, a communication should be addressed to the retiring auditor to ascertain if there are any circumstances that would prevent him for accepting the appointment, right? Such as a qualified report or issues with the business uh, administration or something like that, or issues of any undisputed fee, right? So if there's a communication which is addressed to the retiring auditor, if you have decided to accept the engagement, please make sure that the communication should be addressed to the retiring auditor, and to see that if there are any circumstances that would prevent accepting the appointment, he should evaluate the circumstances which we were discussing, be it qualified report or be it undisputed fee, right? Now, certain case laws which I want to discuss here, right? Let's discuss those case laws also. Also, keep on posting your questions. We will take it at the end, right? So, while the audit was pending, the complainant came to know in this particular case that respondent has signed the accounts of the company for 2 years. The respondent never communicated with the complainant. The complainant had never resigned from auditorship of the company. No notice for the complainant's removal was sent by the company, right? Erstwhile provision of section 139, which is 109, 140, which is 225, 224, were not complied, right? And all this ignored by the respondent, held that the respondent is guilty under item 8 and item 9. So in this case, and these are very common cases, that the auditor is not even, the outgoing auditor is not even communicated by the client, or, and in that case the offense becomes more a grave offense, while you have also not initiated that communication directly with the client, sorry, directly with the incoming auditor. So it needs to be made sure that while you know you have to look into, my suggestion will be, look into last year accounts, right? Look into uh, what is whether any pending outstanding fees is there or not in the books. Look into valid appointment of yours. Also look into valid removal of others. If client is not making the first move, we have already decided that in such a case you have to advise client to make the move. If still client does not initiates that conversation with the client, it is very important that you should know the reasons of change. For very few percentage, I think this has always been a problem, right? Sometimes as an incoming auditor, you see a great opportunity coming your way, and that's where I think the problem starts. You see some opportunity coming your way, and you not, without looking into the provisions of the Companies Act, item 8, item 9, especially the younger ones, please look into. That's why I got all these case laws for you, that at least you should have what law prescribes you to do, right? So only communicating will not solve your purpose, right? You also have to look into the compliance of the Companies Act, right? Let's go on the next slide. So it says the complainant was a tax auditor firm for last 3 financial years under 44 AB. On reminding the auditing firm for getting the accounts audited for subsequent years, the auditing firm informed that the complainant that the work has been entrusted to another chartered accountant and he had also completed the audit. The respondent firm had not only accepted the said tax audit but also completed the same without first communicating with the complainant. Repeating it, right? So in this case, the respondent firm had not only accepted the tax audit but also completed, right? Hence, the chartered accountant was held guilty. Importantly, you have to understand this. Again, same kind of a case law, where as an incoming auditor, the communication by client was not ensured. In fact, we discuss about so many disciplinary cases. In maximum cases, we realize that chartered accountants at some point in time who are held guilty lost their independence, right? I am not talking, in correlation to, uh, I'm not talking in correlation to this particular item 8 or item 9. But we have seen that as a practice, this has been happening that sometimes chartered accountant leave their shoes and enter into the shoes of the client. That's where I think the problem starts. As community, it is important that we remain independent at all point in times, right? And that's where a lot of adjudication of our disciplinary cases also will get over, right? So in this case also, right, it is important how closely you know or how much you are acquainted with the proposed client, or you are not acquainted or you are not aware about the predecessor auditor. It is your duty to make sure that there is no ongoing dispute between predecessor auditor and the client before you accept any kind of an engagement. I hope I am able to clarify this, right? So whenever the first sign of an ongoing dispute between a client and a predecessor auditor is when the first sign between the of a dispute is when the client stops communicating, right? The uh, the client is not in any kind of a communication with the predecessor auditor, right? So you have to make sure, and the reason should also be known to you. Now another thing, right? And that was one of the agenda, right? Which is in case of AG audits. So before we discuss, I'll just take a minute's break and we'll come back, and then we take this forward for AG audits, right? Just give me a minute. Right. So we go ahead, right, discussing the same. So what happens? Let's look into the process of bank audits and AG audits. And I think that's something which is in the mass interest of all the members, right? So in case of AG audits, generally the appointments, right, are made by AG itself, right? In that appointment, sometimes you are not even given adequate time, and that also happens in the bank audit where you receive the where you are expected to give a consent to bank before you accept a statutory branch audit, and then finally this is while you are having an appointment for the first time, right, with any particular bank. Now if this consent, right, has to be a conditional consent which you need to give, right? Where is the problem? So the problem is not that, I know the on 20th or 19th or 20th, 21st March, bank will mail you, ask you for the consent to take an appointment, and sometimes even in their specified formats, but make sure that you add up to the note saying that this is a conditional acceptance, right? Acceptance subject to the NOC from the predecessor auditor. So even in AG audits, sometimes you are not even aware about the incoming auditors. At times, you are given the names of the incoming auditors, but in certain cases in AG appointment, you will see that the names of the previous auditors are missing from the letter of appointment. In this case, also you have to give conditional acceptance. Long story short, if you look at all the cases around, 80% of we members at chartered accountants in case of bank audits or in case of AG audits are not giving conditional consent while taking up an appointment. We are giving blanket consent. What happens if tomorrow at the time of allotment of any branch, right? If there is allotment of a branch from a branch audit, right? You are not able to seek consent from the outgoing auditor, the last year auditor. That is why I'm repeating it. All the AG audits, government audits, where their time is a constraint and you don't have time, even even in sometimes even in tax audits, also you should give conditional acceptance. And once you get a valid NOC, that's where when you can go ahead and commence the assignment. This is something which is a very important learning outcome, that all these agencies, AG and RBI, have their formats. And I think while you adhere to their formats, it is important also to make sure that you might even attach a cover letter to their format. If you don't want to modify their formats, you have this option to attach the cover letter. And with this cover letter, you can write that the acceptance here is a conditional acceptance subject to the NOC received from the predecessor auditor as per the charter or as per the code of conduct which is being levied on us. I hope this is now clear. Few other things, right? As I told you in the beginning of the session, right? Few other things which we should look into. One, the requirement of communicating with the previous auditor, right? Applies to all types of audit, including, I told you, including the BRSR audits, right? It would be a healthy practice if a tax auditor appointed for conducting even special audit under 142A of Income Tax Act, right, communicates, even in case of statutory appointments, it is considered to be an idle practice that you seek a NOC, even regulator is appointing you for a particular audit. Most importantly, which is, I think, which we also should understand, as a community, we are expected to engage in a very cohesive way. Thus, because now there are certain assurance mandates which are coming from various backgrounds. For example, in India, a BRSR assurance or assurance over sustainability reporting can be given by both a chartered accountant and a non-chartered accountant firm also, including Management Advisory Private Limited. The question is, maybe, in a BRSR assurance or a assurance of a select non-financial disclosure or an assurance of an integrated report, right? There could be a case that you are being approached by a particular client, but the predecessor auditor is not a chartered accountant firm, right? In that case, also, it is considered that it is a good practice to communicate even for the assignments which are primarily not held by chartered accountants. And that is with that logic only the internal audit thing came into picture, right? Also, so with BRSR assurance, if the predecessor auditor is a chartered accountant, then there is no confusion, right? You have to communicate compulsorily. But I am saying if the predecessor auditor is a non-CA, right, then also it is expected as a good practice that you communicate the same with him. Hope, I think we are almost done with item 8. If there are any questions, Ashish ji, did you receive any questions as of now?
Yes, sir. We have received some questions. We have received some questions, sir.
Okay, are you comfortable to discuss right now? So maybe this will make it more interactive. So we are finished with item 8. We'll start item 9.
Yes, sir. So these are mixed kinds of questions, sir. Some also belong to item 9 also. So if you,
Okay.
sir, suggest, then I will read them, the questions.
No, okay, fine. So if you can read only pertaining to item 8, and if you are free as of now, because you are still in office, I don't want to bother you too much.
Acha. No issue, sir. I'm just reading that couple of questions which are pertaining to item 8.
Right.
One is, in case of death of partner of LLP who signed the report, who should give the no objection letter?
So in case of death, ideally it should be addressed to the then firm only, right? The deceased partner cannot be addressed. It has to be addressed to firm only, and you can you can take a valid NOC from the LLP firm's any designated partner.
Yes. And one other question, sir. In case the client is not keeping us informed about the new auditor, in case of tax audit, but the audit is in the middle of our engagement, what to do?
I did not understood the question. The client is not informing who the outgoing auditor was,
Yes, sir. Yes, sir.
and the client is in the middle of the engagement, right?
But the audit is in the middle of our engagement.
So how is it possible?
Yeah, it
Unless
is
you
not
know,
possible. Yes, yes.
unless unless you don't communicate with the previous auditor, you can't accept the engagement. As simple as that.
Correct, correct.
Unless we fail to understand this question itself, maybe you were trying to write something else. Please let us know. But it is client has to be duty bound to inform you the details of the incoming auditor. There is no confusion of it. This plea does not work at neither ethical standard board or disciplinary directorate, that we were not aware of the details of the incoming auditors,
Correct,
outgoing auditors.
correct, sir. Sir, one other question. Verifying the payment, does it mean that incoming auditor should wait till the DD proceeds are credited to the account of the outgoing auditor?
No, we are not expected to wait for the DD proceeds. We are just only expected that the DD is made, and whenever the details are ascertained, the efforts to get this DD credited should be demonstrated to the board.
Right. So,
Okay.
you may kindly continue, sir, and I will just.
Thank you. Thank you. Thank you so much, Ashish. Right.
Thank
Any other questions, please WhatsApp to, please message to Ashish. Right. Through our Q&A box. Right. Now, some last few case laws which we wanted to discuss, right? Where a chartered accountant, comments the work. What is, because we were discussing on adequacy of law, right? Uh, Adequacy, in case you're time constrained, I told you go ahead with conditional acceptance. If you're not time constrained, right, then such instances should not happen, right? And these instances sometimes are very frequent. I am giving you one of the case laws, but they are very frequent, that on the same day a letter was sent, and on the same day the work commenced. In fact, on the same day the audit opinion or the tax audit report was issued. This should have some kind of a difference, right? Also, the appointment can only be accepted when, again I am repeating, when it is not responded, when the outgoing auditor does not respond in a reasonable time. Lastly, I told you there is no definition of reasonable time, but if there is a time constraint, please bear in mind the clause which we studied today about the conditional acceptance, right? Second, right, where a chartered accountant as incoming auditor has made written communication with outgoing auditor by hand delivery for seeking is no objection, and without providing reasonable time, the incoming auditor conducted the audit and signed the audit report. He could not produce any documentary evidence of written communication. That is what I told you, that in modern days context, one, please don't prefer any physical written communications with the outgoing auditors. in case you're doing it, I think then you should have positive evidence of delivery from the signing partner itself, which is very tricky. I am telling you that don't go with that way. Even law expects us to do that. Uh, and if you're not able to produce, even how good you are able to demonstrate that you actually went to the uh, outgoing auditor and did this communication. Also, sometimes we read it comes to our knowledge that the communication was done over WhatsApp or the communication was done over phone, right? See, the registered means are given. There should not be any confusion pertaining to this, right? Next. Next comes what are the compliances of Companies Act, because we have to look into item 9, right? And what does exactly section 139 says, what does section 140 says, 141 says. Let's go back and start relating it to item 9, right? So it says that one, a chartered accountant shall be deemed to be guilty of a professional misconduct if he accepts an appointment as an auditor of a company without first ascertaining whether the requirements of section 139 and 140 of the Companies Act in respect of such appointments have been duly complied with. Simple as that. As an incoming auditor, it is your duty to check not only the validity of your appointment, again repeating it, but the removal of the outgoing auditor, right? So what does it states, right? So key interpretation, right? As I told you, one, it is obligatory for an internal auditor to ascertain the requirements. Second, the incoming auditor must not solely rely on a certificate of company management to confirm the compliance. So sometimes we have seen in Board of Discipline or in ESB, it has been produced that the auditor relied on management or the management certificates, right? And management certifies that we are complying to the provisions of section 139, 140. As incoming auditors, as chartered accountants, you are expected to know what are the requirements of section 139, 140. Also, this becomes more complex in case the appointments are done by some statutory bodies like AG appoint as per their regulations, right? Bank audits are done as per their regulations, and the appointment and removals are done as per their regulations. So there are some contradictory provisions which we will try dissecting it. But as an auditor, you are expected to independently verify the company's record to ensure the compliance. And if the company denies any kind of access, right, for the necessary records, if that happens, then the incoming auditor should decline the audit engagement. So all your ADT1, ADT3, in case of retirement, you can ask for all kind of documentation, the minutes of the meeting of AGM, right? All these things, the removal of the auditor, the last minutes, since auditor is appointed for a tenure of 5 years, right? So you need to obtain what was the period of his appointment, and is if there is any casual vacancy, then whether the permission of Ministry of Corporate Affairs or central government is granted in case such change is happening. The problem is that lot of incoming auditors know that they have to seek NOC, but forgets the provisions of the companies in case of casual vacancy where permission is sought by central government, right? So naturally, we have to do certain scenario analysis, right? One, when the auditor is appointed by the first auditor of the company, what does happen, right? And we will then study, if the auditor is appointed in place of an existing auditor who resigned or has been removed or has been ceased to hold the office for any other reason, which is the case of casual vacancy, where joint auditors are appointed, right? When the auditor or auditors appointed by the company were holding jointly, and one or such joint auditors are not reappointed, right? So we have to do all. I think there are three kind of cases. C and D primarily remains to be same, right? So in case of you are the first auditor of the company, to ensure that you are complying to the provisions of the Companies Act, you have to make sure that the appointment is made within stipulated time, right, in the board meeting, and then is further ratified at the AGM, right? This time limit is different for AG audits. In AG, this is done in 180 days, right? In a normal case, you can see the provisions on your screen, right? Uh, so the first auditor, sorry, in AG, the first auditor shall be appointed in 60 days. In case AG is not appointed, then board of directors will appoint in next 30 days. And in case of failure, the member shall appoint the auditors within 60 days in AGM, right? So this is for AG. For normally the companies which non-government companies which we were talking about, right? Such appointment is to be made at AGM of the company, right? In case where it is a casual vacancy, where at any AGM no auditor is appointed, the existing auditor shall continue to be auditor, hold the office till the conclusion of sixth AGM, which is what we are saying. The company is also expected to obtain a written consent of the auditor and certificate that auditor satisfy the criteria specified under section 141 and file a notice of such appointment to ROC within 15 days of the meeting, right? So all these things has to be taken care. Now let's try dissecting it. In case of a first auditor, the appointment has to be, if you are taking up an appointment, make sure that you are taking up the appointment relevant from the board and making sure that it is duly ratified at the AGM, right? Where you are appointed uh, or because of a casual vacancy, I told you that the permission of central government is important. And most importantly, where an auditor is removed, then it has to be removed through a special resolution and post taking the permission of the central government. Also, right, in case of joint auditors, it remains to be the same, right? Even if one of the auditors continue, it doesn't change any provisions of the Companies Act. Even if you're a joint auditor and one auditor is continuing, you have to make sure that as a joint auditor, you are communicating with the auditor who you have replaced with, and your appointment and reappointment is done in a valid way. This cannot happen that even if one joint auditor is being kept by the company, still the approval of AG in case of casual vacancy, sorry, approval of central government in case of casual vacancy, and approval of uh, and special resolution needs to be accompanied even to replace a joint auditor. I hope this is clear, right? Now, for first auditors, right, we have discussed about we are first discussing the non-government companies, right? For non-government companies, the board has to appoint in 30 days, right? If the board fails to appoint in 30 days, then the first auditor shall be appointed within 90 days, calling an EGM, extraordinary general meeting. These provisions you have to make sure that you always have in your mind. And you have to always see that as an incoming auditor, are you being the first auditor? And the company has complied with the provisions of your appointment properly or not, right? This shall be appointed, and as first auditor, you will hold till the conclusion of first AGM, and then this appointment can be ratified also, and you can be removed, right? If the first auditor has to be removed, the only way to remove first auditor is by passing a special resolution for the same. If it is a AG case, right? So 60 days, uh, right? If CAG does not appoint within the set period, then the board will appoint in next 30 days. And in case of failure, such auditor within 60 days in AGM, right? Now, subsequent auditors. So first auditors are, we have completed the provisions of the first auditor. We are looking at the provisions of the subsequent auditors and what happens in case of subsequent auditor, right? So generally, as I told you, the appointment is to be made in AGM. If during the tenure an appointment is made, then we have to know the reason for such kind of casual vacancy. Uh, where at an AGM no auditor is appointed, the existing auditor will continue. He will hold the office till the conclusion of sixth AGM. The company also has to write a written consent from auditor that whatever qualifications are required right, under section 141, those qualifications have been duly complied with, and eventually the same notice needs to be filed within 15 days to ROC, right? In case of government company, generally the appointment has to be done within 180 days from the commencement of the financial year, and the auditor shall hold the office until the AGM of the company for a particular financial year, right? To arrive to what is casual vacancy and how it needs to be filled, right? First, let's look into the non-government companies. In case of non-government companies, if the board has to fill the vacancy within the board has to fill the vacancy in 30 days. However, if the vacancy arises due to resignation of the auditor, right? The company is required to approve the appointment of the new auditor in the general meeting within 3 months of the board uh, board's recommendation, right? And in case of a government company, if the auditor position becomes vacant due to resignation or other causes, the CAG is responsible to appoint the auditor within 30 days. If CAG fails to do so, the board needs to appoint in next 30 days, right? Now comes the most tricky provisions of uh, the removal section, right? So in case where previous auditor has resigned from his position, the incoming auditor has to verify the compliance of the Companies Act, Section 140, subsection 1 of the Companies Act. So if before the expiry of the term, as I told you, he is removed, it has to be done through a special resolution, right? After obtaining the approval of the central government, right? If uh, any action under this section, the auditor concerned shall be given a reasonable opportunity of being heard. That is, the client has to give a reasonable opportunity, right, to the auditor to be represented, and the incoming auditor should ensure that this reasonable opportunity is given to the client, to the incoming auditor. Sorry, the reasonable opportunity has been given to the outgoing auditor. Now, more things, right? Certain more things, and then we discuss the case laws, right? So next is resignation of the auditor, right? In case when the previous auditor has resigned from his position, what all needs to be complied, right? The auditor uh, has to file within a period of 30 days from the date of resignation a statement in the prescribed form that the company and the registered, in case companies referred under section 139 subsection 5, the auditor shall also file the statement with the CAG indicating the reasons as to why he has resigned, right? So, in case while such a resignation is done, right, the primarily body which is responsible is AG, and you have to intimate to AG also, uh, barring the company and the registrar of your resignation, right? I am now, in the final phase, I'll be more interested with the case laws, right? Certain important things which we have to understand from item 9 point of view, from clause 9 of part 1, right? One is that a chartered accountant had not communicated with the previous auditor and also not taken the note. He accepted the appointment without ascertaining, right, the provisions of section 225. In this particular case also, he was guilty under both item 8 and item 9, right? So always make sure that the responsibility does not only gets over at sending the NOC, but it is a far extended responsibility that somebody is expected to take. That is whether the Companies Act compliance is also duly taken care or not, right? Same, I think it's a very similar kind of case law, right? Now, just to summarize what was the idea of the session and what we concluded from here, and then we will take Ashishji's question for next 10-15 minutes, right? So couple of things, right, which why we purposefully hold this section. As I told you, just to give you a recap, very quick recap. Uh, One, I think a lot of cases pertains to the dispute of fees or the change in auditorship. So we consciously thought that we will just go through the provisions of both the Companies Act and both what item 8 and item 9 prescribes and what have been incorporated in our volume 2 and volume 3 as a part of charter. Uh, Also because of it is very desire, it is very understood that there is a slight competition in terms of doing practice, and in this case 1 or 2% of of one of us, right, commits this kind of a mistake, sometimes evidently, sometimes inadvertently, thinking that see, inadvertently is something which, that's why we take all these kind of sessions and lectures to understand what exactly law wants us to do, because still we are not aware, what sometimes I'm telling you, we have seen as naive or as basic mistakes as somebody has just done an email and does not possess an acknowledgement. Somebody thinks that this can be done through a DTDC or done through a private courier agency. That is why we felt that there's a requirement we discuss most minutest things pertaining to this entire entire item 8 and item 9. The focus on AG and government audits and bank audits, the idea to focus there was that if you look into, go back to your homes, look into your consents of whatever bank audit consents you have given and AG audits consent you have given, you will realize that these consents were never conditional. And very few people only, I think, have been given conditional acceptance, specifying that what is the potential reason for such kind of a, what could be potential reason in for not giving a conditional acceptance, right? Also, then as we progress, we dissect what item 8 and item 9 are, and I showed you some references. Our biggest concern was complacency in small engagements. Chartered accountants who are belonging to tier 2, tier 3 cities, engagements which do not specifically pertains to statutory audit of the companies but pertains to tax audits, internal audits, or even in latest trends, the BRSR assurance, what kind of practices should be followed, right? Most importantly, sometimes we have to also together make sure that our clients do not get stuck into this process, right? If somebody wants to do this transition, we should be enablers and facilitating this transition, subject to we have a we have formulated an opinion and the client does not wants us to uh, express the opinion or express the qualified opinion, or there is an undisputed uh, fee which is to be pending at the level of client. Rest reasons, sometimes we see outgoing auditors giving 4, 4, 5 pages of objections and nothing specific to the qualification, nothing specific to any fraud or misrepresentation in the financial statement. But I think they're more hurt with that change. Unless we make this happen, it will be very difficult for us to command what are the minimum fees which are being prescribed by the institute. Unless we are able to demonstrate that kind of an independence to the client, uh, I think the fee structures are also correlated to you leaving in an engagement, taking up an engagement, and making sure that we are visibly transparent and independent because of complying to these provisions. It's still you will still find that when you look at the BOD case law references and directorate references, the hard fact is you will find maximum cases pertaining to this. And my only request is that there is no point in entering into and leaving our shoes and entering client shoes and being very accommodative for clients, because rest all cases pertains to clients being the complainant. Maybe as a gesture, if we chartered accountants might be okay with leaving our fellow brother okay if there is some inadvertent lapse which has happened, but clients never leave us. If a client is or a client is jeopardized in that particular place, we are seeing constantly that client is dragging their auditors into such kind of issues. Make sure that all your terms and conditions are very specified. We have seen issues pertaining to overcharging of fees. We have seen issue pertaining to illegitimate claims of out of pocket expenses, disputed fees. The word disputed fees should actually never happen in case something is agreed over an EL, and if any scope is extended beyond it, right, which is permissible to do with statutory audit. That's where I think you have to again amend your EL's appointment letters and keep up to the documentation. We are at a stage where almost every firm is getting ourselves peer reviewed. So it is important to follow that kind of practices, and eventually I think this will be enabling us for better fees and command over fees. So thank you so much for. I was between a travel, so maybe there might be a voice lag or some stagnancy during the deliberations. The idea was to always dissimulate this information. It could have definitely gone better, Ashish ji, but I was too much involved into lot of things. But thank you so much for patiently everyone to hear me out.
Yeah. Thank you, sir. Thank you very much for your wonderful session. And there are some more questions, sir. With your permission, may I take?
Sure, sure, sure,
Yes.
sure. Please.
So one question is that the auditor is neither auditing the accounts nor submitting the resignation. To avoid the delay in holding AGM and filing of annual financials with ROC, can the company adjourn it for want of audited accounts and file the unaudited accounts with ROC?
So it has multiple questions, right?
Right.
But the question is that this comes from some potential incoming auditor. My concern here is that this question, naturally we all are chartered accountants, so
Yes.
I don't see any client representation coming here. But
Yes.
it has multiple question. Question number one, that whether an unaudited accounts can be filed, right? So
Yes.
in case of if an auditor is not agreeing to sign, right, then there
Yes.
is a proper process through which you have to communicate with registrar of companies that why such audit you are not able to complete it on time, right? There could not be a case where you can blanketly file unaudited accounts. You need to seek a prior approval for doing it. That's what my understanding is. Also in such circumstances, don't look for any if the predecessor is auditor is not cooperating, please don't look for any kind of an opportunity into it. Let them resolve the issue and then only take up a fresh engagement would be my view, Ashish ji.
Yes. Fine, sir. So next question is, when is audit deemed to be accepted? Is it after the appointment by the shareholders? If yes, then should the communication be sent to the predecessor auditor after the appointment by the shareholders?
So it is clear, right? You can give a consent to be appointed under section 141
Hmm.
at the AGM, right? That should not be an issue, right? If you give that consent, you can move ahead taking an engagement. But first you have to, before you take a appointment letter from the company, right, in AGM you just, if you look into the minutes of AGM, it only tells about that this auditor shall be appointed, right? And then eventually the remuneration and everything is fixed by board. In meantime you have this time to give seek for the consent from the predecessor auditor, and then once you get the consent, then you should give consent to the appointment which is being taken up, right?
So the next question, uh, do we have to make sure that the hand delivery with written acknowledgement should be done by the signing partner?
Yes, but preferably, right? And at least in cases, because what happens, we have seen in lot of disputes that this goes, so bylaw does not specify anything. Bylaw says a chartered accountant should take permission from a chartered accountant. So bylaw even does not specify one. So my bare interpretation is that it is from one individual to another. But if you, as in case of a deceased partner, or in case of a, you know, any circumstance where you are expected to take it from other partner, then only you should take. Otherwise, A partner cannot take permission from B partner, right?
Yes, right. So the next question, how can it be demonstrated that an auditor is being removed because of issuing a modified opinion? The auditee could not give any reason other than the reason for giving a modified opinion.
So the validity of reason always needs to be taken, make sure by the incoming auditor itself, right? So never ever it will happen that if any, previous year modified opinion is given, that is already, uh, the audit report is already issued. In due course, right? This reason has to be thoroughly evaluated. And if this is not, if I would say, if the final outcome is still not determinable, then the appointment will always be a problem. So only where a modified opinion is being issued, or a qualified opinion, or they are in process of issuing it and somebody is restraining, that circumstances have to be identified by the incoming auditor. That's what law is expecting.
Right. So next, in case of an audit granted by the government authority and it is not possible to deny the assignment due to legal provision, then how to go ahead if previous auditors' fees are outstanding?
So generally in government audits, this is a very common thing, and that's what I told in the beginning also, that if I don't think legally you are bound to accept any audit, Ashish ji. Does this happen?
Yes, sir, you are correct, sir. Legally, we are not bound. We legally do.
Legally, why would somebody be bound to accept audit? Which provision says that an auditor needs? If I am not even, valid for an appointment, if my validity is challenged itself, then how can I take a? I still don't know, but still, I think there could be some personal commitments to government agency, or maybe some relationship that should not come in between. Ideally, if there is an outstanding fees in case of a government audit, also we should not take up an engagement, right?
Yes. Yes. So next, was there any action against outgoing auditor for not responding to incoming auditor's letter regarding the appointment?
Or outgoing auditors are not duty bound to respond to incoming auditors unless they find something which needs to be communicated to the incoming auditor,
Hmm.
and which can have an impact on their working of the incoming auditor.
Yes. So then there is one question from Arpit Nagdaji on this. It says that if a partner leaves a partnership firm, is NOC required from the leaving partner if the tax audit is done by the remaining partner of the firm?
Sorry, Ashish ji, I lost your voice. एक बार वापस से बोलना.
Yes, sir. Sir, there is one question from Arpit Naglaji that if a partner leaves a partnership firm, is NOC required from the leaving partner if the tax audit is done by the remaining partner of the firm?
The NOC is required from the if the tax audit, if he has handed over that tax audit to another partner, then though there is no question of me taking NOC from the living partner, because my last incoming auditor was somebody who signed it. But the question remains to be very valid. In case, a partner is a partner in ABC and he joins some another firm XYZ, then whether you should take firm from, you should take NOC from A or from XYZ, right? ABC or XYZ. In this particular case, you are expected to make sure that you take consent from the signing partner, not the partnership firm. I am Ashish ji, please correct me if I am going wrong into it. It has to be taken from the signing partner.
Yes, yeah, no, you are right, sir. You are right, sir. Okay, sir, that's all, sir. And thank you very much, sir, for
Thank you
responding
so
so well
much.
to the FAQs. And I must also add that Ankit sir is also a member of the group of Ethical Standard Board on revision of Volume 1 of Code of Ethics and has contributed throughout the year immensely. And
Thank you so much, Ashish
uh,
ji. And
yes,
I am always time squeezed. I always want to contribute more. Today also, I told you in the session that I just want that maybe, we have more deliberations around this topic and we can
right.
deliberate in detail. Thank you so much. Thank you, everyone.
Thank you, sir. May I now request a vote of thanks from CA Arpit Nagra, who is the management committee member of the Mandsaur branch.
Thank you so much, Ashish sir. I would like to thank Ethical Standard Board for arranging such an informative session. And special thanks to Ankit sir for explaining such beautifully with examples and case studies that how we can avoid such things, that how we should take NOC, how जो गलतियां, which mistakes we are making. We should avoid making such mistakes. And I would also like to thank Ashish sir, tech support team for such a beautiful arranging the webinar. Thank you, sir.
Thank you. Thank you. Thank you, sir.
Ashish ji, thanks. Bye.
Thank you, sir.